Welcome to Markets Now. I'm Michelle Rook with Jim McCormick, agmarket.net. Well, we had green on both the grain and livestock futures board on the close on Monday. And Jim, it felt like a risk on day, and we haven't had one of those for quite some time, have we?
We definitely haven't had him for a while, especially on a Monday. It was very nice to see. It was definitely risk on. A lot of dynamics really moving the market, Michelle, on both kind of the domestic side and the world side, I should say. I mean, you've got some weather issues showing up. We got some planning delays here and there, but you also got the stock market that is ripping higher right now. At the same time, the metal markets are breaking really hard as maybe some of that, nervousness of people worried about what was going on in the Middle East spinning out of control seems to move to the back burner and bringing the money back into the stock market and taking some of that risk assets down.
So you think maybe the stock market is corrected enough for the time being, and what impact could that have on maybe even the grain sector at this point?
Well, right now, it looks like, statistically, I think it was down about a 5% correction is what the stock market did on the S&P. And, in general, I think we have 5 to 6 times a year we get that kind of a correction. It looks like at this point the correction is done. What does that mean for the grain market? I don't think it's going to have a huge impact, but more psychological. If you start seeing this market starts to rally, people feel a little bit better about spending money. That's going to help support the livestock market. If the livestock market goes up, that tends to support the grain market. But right now, the storyline in the grain market, Michelle, is going to be essentially the weather situation, not just here in the United States, but around the world.
Yeah, so let's talk about that because we led the gains on Monday, and that was largely a result of putting in weather premium, not just from a U.S. perspective, but we've got some concerns in Europe and the Black Sea, right?
Exactly. We've got dryness issues in the plains. There is some big rains coming in, which is probably going to hinder a little bit of planting of the corn and bean crop. But unfortunately for our clients out there in the West, or the producers in the West, parts of Kansas, Texas, Oklahoma, there's just not much moisture out there. That crop is definitely suffering. We're looking for the crop conditions to fall here when the government releases them this week. But that's not the only portion of the world that's got dryness issues. Parts of the Ukraine are dry, as well as parts of the Black Sea region are dry. And then on top of it, over the weekend, Russia did attack some Ukrainian ports, and that has the market worried that potentially Russia is going to go after more and more Ukrainian infrastructure as this war continues to drag on. And if their infrastructure gets damaged, they won't be able to get the product out. That added to the bullishness. And then lastly, on this week, there was a story out on Friday suggesting that India's wheat stocks are now at 16-year lows. They've been essentially using their wheat stocks or releasing them as a way to drive down food prices because they are in an election year and they want to try to keep food prices down. Now, what that means is so critical is if India stumbles and their wheat crop is not there, they're more likely going to be forced into the international market to keep domestic prices down. But kind of its converse, Michelle, as they're essentially buying product to keep their domestic prices down, by importing it, it will potentially drive the world prices up, and maybe even the U.S. situation, especially if the grain in the Black Sea region continues to have production problems.
Okay, so India could actually be a game changer then.
I believe so. I mean, traditionally, they are not importers of product. They are usually self-sufficient. So if you get a country that's normally self-sufficient coming in here and actually buying supply off the world market, it does change the dynamics because those buyers that may be normally buying our U.S. wheat may have to compete with the Indian purchases. That could be a game changer. So it's something we need to watch.
Absolutely. What about corn and soybeans? Did they just follow the wheat rally today?
I think it was definitely a little bit of follower. There's no doubt about it. But you got to look at the fund position, Michelle. They are carrying a very big short position. I don't think it's quite as big as a record short earlier this year, but for this time of year, it is probably a record for middle to the latter part of April. So when the wheat market took off, it spilled into the corn market. Corn market started taking out some moving average resistance. And I think that started triggering some technical short covering by the funds. And then it spilled over in the bean market. And this could get a little bit interesting the next couple of weeks. Like I said, the funds are quite short. If they decide, hey, the party's over, at least temporarily, they could give us that move that every producer out there so desperately wants to see.
Yeah, Jim, they're short collectively like 640,000 contracts now in the grains. And, how much of a rally could that produce? Because they typically aren't that short this time of year for sure, are they?
Well, they're not. It's going to be really interesting. It's hard. It's going to be hard to say, Michelle, because there's two dynamics that were at work right now. Yes, they are short, but when they, but what's interesting, what's going to be challenging about it, logically, when they get out, it should drive the market quite a bit higher. But on the other hand, especially in the grains, especially in corn, the producer, unfortunately, is carrying a lot of corn left over from a year ago. So there is going to maybe be a little bit more overhead resistance as the funds start liquidating their short. You are going to see more and more producers selling, which will limit that rally. But hopefully we will get that rally. And I would encourage people to take advantage of it. More than likely, it won't last.
Yeah. Now we have option expiration coming up here, and we're going to move into first notice day. And so will we get that farmer selling right now that'll offset that, just because of the time period that we're looking at and having to roll or put some of those basis fixed contracts into place?
I think you're going to see some of it, Michelle, but in general, I'm going to say in general, I do not think we have near the problem we had at the end of March. Now, end of the March, we really had a big problem with a lot of grain being forced to roll, a lot of grain moved to the market because of producers that did deals or forward contracts, basis contracts for winter delivery. There's not a lot of producers that do a lot of May contracts for that kind of delivery period, being the fact they know they're going to want to be in the fields planting in April. So we're going to see a little bit of that, I believe, but not near to the extent we had in March, thank goodness.
You bet. All right, so you were talking about technically kind of holding support areas. So soybeans, was that a double bottom that you think we put in there?
I think you can't argue it. I mean, technically, I think that's what you got to look at, Michelle, for the beans. It's, if you look at the bean situation on the fundamental side, that's probably going to be the hardest thing to rally, I believe. I mean, the reality is you look at the acreage number the government gave us for planting more bean acres. That's definitely not bullish. And the reality is we are not in the window. We sell a lot of beans, folks. That the window is usually the time to sell corn. They got some import data in from China here recently. And the reality is our market share to China continues to lessen. So if we do get a rally, it's probably going to be technically driven. Maybe kind of force some of these funds out of the short position. But like I said earlier, if you get it, I'm going to encourage people to take advantage of it and move some of that grain they have yet to sell.
Okay. And hopefully we can get above some resistance areas too on the top side, because we're still pretty range bound and everything. Cattle market, was that risk on buying today because of what we were seeing in the outside markets, including the stock market, or did we get bulled up on that placements number on the cattle on feed?
The cattle feed, no doubt about it, was bullish. It was all those numbers came in lower than what the trade was thinking. I think the market was looking for buyers to come in to begin the day. I had a few people talking limit up, but in general, it was a very strong day. There's no doubt about it. Risk on helped. Stock market moving higher is definitely a positive sign for the beef market. The other storyline I got to say, Michelle, potentially is on Friday. They did confirm, I think, what a lot of people in the industry feared or thought was going to happen. These bird flu that we've seen in the cattle herd has been transmitted cattle to cattle. But that headline came out and it did not have much of an impact on the marketplace, which tells me that at least at this point, that story has run its course and we're going to get back to trading other headlines. And the reality is this is a time of year we tend to see the demand for beef pick up as we move into May, June time period. So hopefully we get good demand. You've got a good stock market. Correction looks like it's over with. Hopefully that's a good sign for the beef market.
Okay. So you're ready to call a bottom then?
Right now, I'm going to say the near-term bottom's in. I think overall rallies are going to continue the next couple of weeks and months, hopefully. But that being said, you saw how quick the market can change on a negative headline. The reality is this bird flu is still abound, around us, I should say. Birds are still migrating. So we could get a negative headline story. So it's not the worst idea to have some puts under the market. But, the trend right now, I think, is still going to be up on consumer demand.
Yeah. So the hog market started off lower this morning after what was kind of a chart breakout on Friday, but then closed to the plus side. So did the hog market just follow cattle, or was it trading its own fundamentals?
I think it was following cattle, I should say, Michelle. I mean, if you look at the last couple of weeks, we've seen a lot of aggressive buying cattle, selling hogs, or vice versa. I think today the hog market was looking for people to buy cattle on that cattle on feed report and sell hogs. We didn't see a whole lot of pressure in it. And then essentially the hog market just kind of followed the cattle up on in general, with a relatively lackluster day compared to some of these other markets.
Okay. Thanks for joining us as always. Jim McCormick with agmarket.net. That is Markets Now.